Hey there, neighbors. It's Nicole Fetter, your local Arizona realtor. Last week, I talked about how we are not currently in a real estate market bubble, nor are we likely to enter a real estate market bubble anytime soon. I know there has to be at least a few of you out there wondering, if we're not currently in a real estate market bubble, then what does this lack of inventory, the huge equity gains, and the now increasing interest rates mean for our real estate market and the future of our real estate market? Well, economists are saying that we should expect equity gains to continue throughout not only 2022, but 2023 as well. Not like we received last year. Last year, the average equity gain in a home was 25%. What economists think is going to happen over the next 2 years is about half that. Let's go ahead and take a closer look at what the lack of inventory, the increasing equity gains, and the now increasing interest rates means for our real estate market and the third and fourth quarter of 2022. Let's start by talking about the limited availability of homes for sale here in the Phoenix Valleys. With interest rates increasing 2% in just over a month, people seem to think there shouldn't be no lack of inventory of homes for sale. But we got to look at this a little closer. Currently, there's 7,700 homes available for sale in the Phoenix Valleys. 1 year ago, there was 8,700 homes available for sale in the Phoenix Valleys. Both numbers very much a seller's market. 2 years ago, there was 14,000 homes available for sale. 14,000 homes is getting much closer to a balanced number. So we need to get the numbers back up there before we are going to be in a balanced market. So it is going to take some time. We are already seeing a decrease in demand of people looking to buy houses due to the lack of inventory and options and the increasing interest rate. But again, it takes time to get for such low numbers back up to numbers that are going to be closer to a balanced market. As I mentioned, one of the biggest reasons for the decrease in demand to purchase homes is the rapidly increasing interest rates. If someone was interested in upgrading or even downsizing their house, they're likely to have to say goodbye to that lovely 2.75 interest rate and hello to 5.5%. That is not something we're going to get super excited about. That means less buying power. To give you an idea, the average house they're saying costs around $400,000. So we're going to assume that people are putting 20% down. That's $80,000. Home price or a loan price of $320,000. So if you take that 2.75 interest rate, assume we have that down payment, and now you have to increase to 5.5%, it's going to cost you around $500 more a month. That is a huge increase for the same size and price of house over just 6 weeks. People not only are not going to be excited about that, they likely can't afford to. And what would be the point of downsizing? If you're going to have the same monthly mortgage, most people aren't going to do that. So we have to take that into consideration. Another thing that we need to look at is people getting priced out of the housing market because now their monthly payment is just going to be so high that they cannot afford to buy a house. Let's talk about renting houses versus buying them. For the first time in many years, it costs more to buy a house than it does to rent one. The average rent for a 1,500 to 1,750 square foot house is $2,250 here in the Phoenix Valleys. If you wanted to purchase that same house, your monthly mortgage is going to be $2,750. That $500 difference a month is huge. Even those that haven't been priced out of the market may likely choose to pocket that $500 a month and wait on purchasing a home. We need to talk a little about investors. The current real estate market has been highly driven by cash investors renting out or buying properties to rent out. We are starting to see a shift in the rental market. The cost to rent a house monthly has slightly came down in the last month. We are also starting to see a slight increase and rental vacancies, meaning it is taking longer to rent out properties than it previously was. When investors start seeing this, they start backing off the market, stop buying houses. They are not in the business of having any house left vacant. They want it rented out right away from a high price point. So we are starting to see investors, cash investors, back off the market a little bit. Flip and iBuyer investors. We have already seen the Zillow iBuyer branch go out of business. Open Door posted $890 million in losses over the past years. Personal flip investors need 25 to 30% margin from buy to sell, from acquisition to sell, to be able to pull a profit. We are not seeing those kind of margins. We're seeing houses even in awful shape sell at market value over just a weekend still. There's not the place or the margin that iBuyers or flippers need to make money currently. New builds here in Phoenix. We are seeing chain supply issues when it comes to new builds. They're not able to build as quickly as they would like, but when materials are coming in, they are prepped and building homes as quickly as possible. The new build companies already own the land and continue to build out on that land until they no longer have land. So we are going to see plenty of new build options for years to come here in the Phoenix Valleys. What does all this mean? To review, the lack of inventory is going to continue to be low for quite some time, but it is starting to increase and will continue to increase through the third and fourth quarters of 2022 and into 23. Interest rates are going to increase as well. How much? They'll go up and down. They're cyclical. They always do. How much? We do not know, but that is going to continue to slow demand and affordability of housing for people to come in and purchase homes. The increase in the amount homes cost is going to push more people to rent homes. So again, that is going to decrease the demand of people purchasing homes. We're also likely to see new build companies continue to build and people to have those options. So what we are going to see is an increase in value of homes due to the lack of inventory that is going to have to go up on a very slow pace. But we have seen a market shift and it will continue. There will be more homes available to purchase. There will also be people that choose to move in with their families due to affordability issues, and that will shift the market a bit as well. So we do have a lot going on here in 2022 in the third and fourth quarters. It isn't going to happen overnight like it did in 2005 or like it felt like in 2005. We are going to see a slight market shift through 2022 and 2023. What will happen after that? I do not know. We don't have a crystal ball, but for now, the market is very stable and likely to increase in home values, and you're not going to have a ton of options to purchase all at once. So try to be patient, check out what's available, buy when you can't afford to buy. It is a good option still. Thank you for taking the time to watch this video. Please like and share it with your friends and family. Help continue to educate them on the home buying and selling process. And remember,
go better with Fetter. You'll love her forever. She'll get you a home today.